What's up to you all accounting buffins? It is a lovely Thursday, time to learn more and learn extra with us. My name is Abram and with Mahesh.
Hi,
Mahesh, how are you?
I'm good, and you?
I'm good. I can't complain. It's a lovely Thursday.
It is.
And it's time for us to learn. I know that Mindsetters have been looking forward to this show. It is their first live show for the year because we haven't been having live shows. So
Woohoo.
It's exciting.
It is. It is. Exciting times, guys.
Right.
Yeah.
What are we doing?
Okay, today Mindsetters, we're focusing on the cash flow statement. So remember, we spoke about ledger accounts, company ledger accounts. We spoke about financial statements. So we're now moving on to the cash flow statement.
Nice one.
Okay.
Well, guys, to be part of our show, it's simple. Simply log on to your Facebook. Go to facebook.com/LearnExtra, XTRA. Like our page and join over 104,000 Mindsetters that are on our page, helping one another. And let's engage, guys, and help one another. I've got the notes posted for you because I love you guys. There's a viewing option and a download option, but you can also check our notes at any time. Our schedule is on learn.mindset.co.za. Also follow us on Twitter at LearnExtra. I'll be looking at some of your tweets and see what you guys are saying and your comments over the show. Remember the notes that Mesh is going over, we have them on an awesome workbook that you can order for yourself by simply sending an email to sales@mindset.co.za. So if you want more information, ask me on Facebook.
Okay,
Let's
cool.
do this.
Fantastic. Just about those notes,
Yes.
I've looked at them and I think they are absolutely fantastic, guys. So please download those notes or get a hold of this workbook.
They're very simplified and it's
Yeah.
all in one. And that's the question the Mindsetters have been asking, that where are the answers? We want the answers. So the answers are all
Exactly.
included in the
There's a
workbook.
question paper. There's a question paper. There's a blank answer sheet for you to try the question, and then there's the actual memo as well.
Nice one.
Okay.
Simplified learning.
Yeah, simplified learning. Can we get started?
Let's do
Okay,
this.
let's do this. Right, guys, as I mentioned, we're looking at the cash flow statement. What I want to do is let's quickly talk about the cash flow statement. Let's see what you remember about your cash flow statement. Now, the first thing that comes into mind is your cash flow statement is a financial statement. Okay, now remember, financial statements, we've done the income statement, we've done the balance sheet, but because we are now accountants for a company, we've got to prepare a third financial statement, which is the cash flow statement. Now, what does this statement look at? Okay, this statement, guys, we're now focusing on, obviously, the word cash, and the way in which cash flows, the directions in which cash can flow. Now remember, cash can flow into the business. In other words, there can be an inflow of cash, and cash can also flow out of the business. Here we're referring to outflows of cash. So simply put, in a nutshell, if I had to ask you, what is a cash flow statement? It's simply a financial statement which tells its shareholders the flow of cash or the flow of money into the business's bank account for a specific period of time, usually 1 year. So what do we mean by that? If, for example, at the beginning of the financial year, the business has 10,000 Rand in their bank account, at the end of the financial year, the business now has a bank balance of 200,000. We are basically looking at how did the business get from 100,000 to the year-end balance of 200,000. What happened in between? That is what your cash flow statement explains the shareholders. Okay, right, I think let's get started now with a question. So the question that I've selected requires us to complete the following. So we are given Bailey Limited has an authorized share capital of 500,000 ordinary shares. Shares in issue were sold to the public at the incorporation or at the start of Bailey Limited. Now your instructions or your required is as follows. We're going to prepare the following with regards to the cash flow statement for the year 2007. Right, let's read. We're going to firstly complete the note showing the reconciliation between profit before taxation and cash generated from operations, and most of you know this note as note 1. Right, this is for 20 marks. It's quite a long note, and the marks obviously will be much higher than the other sections of the cash flow statement. Second question, we're going to calculate the dividends paid. And then finally, question 3, calculate or calculation of taxation paid. Right, let's now go to our information and let's see what they've actually given us. Okay, so in this question, guys, we are given an extract, so it's not the entire income statement, an extract from the income statement of Bailey Stores for the year ended 28th of Feb 2007. Okay, so we've got our income statement or the extract. Then we've also got an extract from the balance sheet of Bailey Stores as at 28th of Feb 2007. Right, now when you get to the balance sheet, guys, this is absolutely important. I want you to remember this when you are practicing exercises at home. You're also going to remember this when you're preparing for tests or any exams. When it comes to the actual balance sheet, you are given 2007, which is your current year. And I want you guys to remind yourselves that 2007 represents the current year. We are also given 2006. 2006 will be my previous year. Okay, now remember, previous financial year is where I get my opening balances from. Current financial year is where I'm getting my closing balances from. Okay. Right, so we've got our extract from the balance sheet, which we've looked at very briefly. Then we've got some additional information, which we're going to read when we start the actual question. Okay, right, guys, let's get started. So let's look at our first question, where we are calculating, or we're completing note number 1, reconciliation between profit before taxation and cash generated from operations. Right, now I've already mentioned the cash flow statement is a financial statement, and with financial statements comes format. Now when it comes to format, Abram, format is something you cannot change. Okay, so guys, you need to know your format, and the fantastic part is the format is given to us in the book. So the notes that the students have, the notes that you've just posted,
Yes.
the format is there. So guys, do yourself a favor, learn your format. Okay, right, so we're going to start off this note with our net profit before tax. Okay, right, where do we get our net profit before tax? Obviously, guys, from that income statement. So let's now go to our income statement and let's look for our net profit before tax. Okay, so there's my income statement. So I'm given net profit for the year. However, they're giving me net profit after tax. Then further down, or further up rather, I've got my income tax given to me. Right, the calculation, guys, not difficult, but please remember, think about this a bit before you actually do the calculation. Net profit for the year after tax is my final amount in my income statement. Above net profit after tax, I now disclose my taxation. Remember, your taxation is an expense. Therefore, in the income statement, it is in brackets. We are asking you for the figure that appears above this. So what was your net profit before taxation? Okay, so in other words, you are now working backwards. So I'm simply taking my 90,000 plus 60,000, and that gives me an amount of 150,000. And always double check. So if I took 150,000, if I was doing the income statement, I subtracted 60,000, am I ending up with a net profit after tax of 90,000? Okay, in this case, we are. Right, so we're now going to take our net profit before tax of 150,000 to our answer sheet. So let's do that. Net profit before tax, 150,000. And always remember, guys, I don't have much space here, but you showing your calculation in brackets how you got to that 150,000. Right, let's move on. Next part to the note, I'm now going to make an adjustment. So adjustment for the following items. So the first item will be my depreciation, and again, this is format. The second item will be my interest on loan or interest expense. Doesn't really matter whether you call it interest on loan, interest expense. You can even call it interest paid. Right, let's now start with depreciation again. Depreciation is an income statement item. So I'm going back to my income statement. Okay, so let's go to that income statement. There we go. Depreciation, they are giving me depreciation on vehicles at 27,200. However, my depreciation on equipment is an unknown. I don't know what my amount is for depreciation on equipment. Right, now there are many ways in which you can actually do this calculation. The method that I'm going to discuss is one of the methods that I find my students often enjoy, and they normally get it spot on correct. So hopefully you guys are going to also use this method. But like I said, mindset is cash flow statement, there are many ways to do the calculation, and you guys need to look at various ways and decide which method you prefer, because remember, all methods will give you the correct answer. Okay, so the calculation of depreciation on equipment. Let's now look at the information that I've been given that's going to assist me with the calculation. Obviously, I need my depreciation. So let's go further down. The next item that I also need is the value of my fixed assets from the balance sheet. So I've got my closing balance of fixed assets. Okay, that's given to me. I've also got my opening balance of fixed assets, and please bear in mind, this is at carrying value. So in other words, whatever comes from the balance sheet is at carrying value, cost minus accumulated depreciation. Right, further down, I now want to know whether we bought or sold fixed assets during the financial year, because that is going to impact on my calculation. So if we go down to our additional information, new equipment with a cost price of 150,000 was purchased during the year. No fixed assets were sold during the year. So this part of the additional information I'm going to also use as part of my depreciation calculation. Right, I've highlighted what I need for my calculation. Let's now look at how we're going to go about calculating depreciation. I'm going to construct a T account that actually doesn't exist in terms of the accounting records of a business. However, because this is a calculation, okay, it's absolutely perfect to draw up a T account. So the T account that I'm using is called fixed assets, and in brackets, this fixed asset is at carrying value. Okay, right, at the beginning of the year, fixed assets will have an opening balance brought down at the beginning of the year. Okay, what I'm going to quickly do is classify the account. It is an asset. On the debit side, there's a plus. On the credit side, there's a minus. So let's look at our opening balance for our fixed assets carrying value. Right, so if I go to my balance sheet, at the beginning of the year, 2006, remember, represents beginning of the year, I had an opening balance of 437,600. So let's take that through. 437,600. Okay, so 437,600. Right, now let's look at end of the year. End of the year, obviously, as accounting students, you know this. End of the year, I end up with a carried down, a balance at the end of the year. So let's now go back to our balance sheet. And at the end of the year, our fixed assets has a carrying value of 5,444,000. So let's take that through. Okay, so 5,444,000. Right, now let's examine this account more closer. Fixed assets, my carrying value increases whenever I buy additional assets. If I buy more assets, fixed assets, obviously I have more fixed assets in my business. My carrying value is increasing. So if we go to our additional information, did we buy additional fixed assets? Yes, we did. So fixed assets, new equipment with a cost price of 150,000 was purchased during the year. Okay, so let's now enter this. So I purchased new assets of 150,000. What now decreases my carrying value? In other words, what now appears on the credit side? My carrying value decreases whenever I write off depreciation. So let's fill that in. The moment I write out off depreciation, my carrying value is going to go down. What else decreases my carrying value? Whenever I sell assets, in other words, I'm getting rid of my assets, if there is an asset disposal. Now, going back to the additional information, no fixed assets were sold during the year, so I'm going to put a 0. My depreciation amount is the amount that I actually want to calculate, because remember, I'm only given my depreciation for, I think it was for equipment. Let's quickly check. So let's go back to your depreciation. So I'm only given my depreciation for vehicles, but not for equipment. I need my total depreciation. So 27,200 is the only figure that they've given me. They haven't given me the entire amount of depreciation. So in other words, in brackets, I've got the 27,700, but I don't have the depreciation on equipment. Therefore, I'm calling this X. Abram, I don't know about you. But when I was at school, whenever the teacher said solve for X, I used to panic. I don't know about you.
I used to panic as well.
You used to panic as well.
Mathematics, all of us.
So
all of
whenever
us.
they say solve for X.
It's a common thing. It's just like when they say solve for X,
Yeah.
you think like,
oh my God.
oh my gosh,
Oh my
there we
God.
go.
I know.
Where
I
does
used-
this X come from? That
Exactly.
you always need to solve.
Exactly. Right. Now, one way of doing it is don't call it X anymore. Call it either M or call it A. Okay? You guys decide. But let's just, okay, for now, I'm going to leave it as X. But what does this simply imply, guys? This implies that in order for me to solve for X, now remember, as accounting students, I know the debit side is exactly the same as the credit side because I've got a brought down and a carried down. So in other words, the account has been balanced. Right, if the debit side is exactly the same as the credit side, how do I now solve for this unknown? How do I solve for X? Simple. I start with the side that gives me all the known figures. In other words, I'm going to start with the debit side. So let's get our calculator out. So on the debit side, I'm getting a total of 437,600, and I'm now adding 150,000. So that gives me 587,600. So 587,600. Whatever I have on the debit side, it's obviously the same amount on the credit side. So 587,600 minus my 5,444,000 is now going to give me my X. So that is how I solve for this X. Right, so with the calculator, okay, in order for me to solve for X, 587,600 minus 5,444, 2 zeros, and my total depreciation, 43,200. Okay, so this amount, 43,200, and this is the amount I need in my not balance sheet, but my cash flow statement note. So let's take that amount through, 43,200 to our answer sheet. Okay, so depreciation, 43,200. Right, obviously guys, you can show your calculation in brackets, and now you're probably thinking, such a long T account, how do I now show this in brackets? What did I simply do? I added my debit side minus one figure on the credit side, so there's three totals that I'm showing in brackets to get this figure.
Right.
Okay.
I
Right,
think
how are we
it's
doing,
almost time
Abram?
for the break.
Is it time for a break?
Yes.
Okay.
Guys, let's take this short break, and a big shout out to Oliver Unfortunate who's watching, and Nokolo Kamete who's new on Mindset. Welcome. We'll see you guys after this break. Welcome back, awesome mindsetters. Now, I just want to urge you guys, or rather challenge you, if you've got a question, make sure that you give it to me, and I'll make sure that Mehesh answers it. Great comments are coming, Mehesh, and a question as well. There's a comment from, where's this comment? It's from, okay, I'll get that comment.
That's
But there was
fine.
an awesome comment that I got. All right, it's from Adelaide saying, enjoying the show. Please greet Mehesh for me. Hi, Mehesh.
Hi,
for Adelaide.
Andile. How are you?
Nice one. And on Twitter, this came on Twitter, Mehesh from Ozgnez saying, what about the 27,200? Don't we add it to get the depreciation together with 43,200 to get 70,400? That's the first one. And the second one from Duncan, at Bongani_Duncan. What if we have sold equipment? What will happen to the T account, to the asset disposal?
Okay, right, let's take the first question. Very, very good question. Because remember, we were given 27,200. But when we're preparing the cash flow statement, guys, what you need to remember, we need total depreciation. So I think her question is, what is the depreciation on equipment? Okay, because remember, the depreciation on equipment wasn't given to us. That is why we had to do the calculation. So in order for us to calculate depreciation on equipment, which actually isn't really necessary, but let's show you guys what the depreciation on equipment is. This amount, the 43,200, represents total depreciation. I've already got depreciation on vehicles, 27,200. So in other words, my depreciation on equipment, if I subtract these two figures, let's do that quickly. Okay, so let's clear that. Right, so if I take 43,200 represents total minus depreciation on vehicles, 27,200, and that gives us 16,000. Okay, so my depreciation, you guys are going to see this on the memo, on equipment is 16,000. Once I get 16,000, I have the 27,200. These two amounts added up is still giving me that 43,200. Okay.
All right.
Right. I think your second question was, what if we have asset disposal?
Yes.
Okay. Now, guys, if that happens, if we do have asset disposal, let's go quickly back to that ledger account, because that's quite an important question. Remember, at the moment, we don't have asset disposal, so I've got a 0 for that. I'm not calling it X. I'm calling that, or filling in 0. If you do have asset disposal, you are now taking your cost price minus accumulated depreciation on the asset that you're selling. In other words, what was the carrying value of your asset disposal? Remember, with this T account, fixed assets is shown at carrying value. So you need to record what was the carrying value, what was the worth of the asset when we disposed of that asset. And remember, the moment you sell the asset, okay, so Abram, if I take away your laptop,
Yes.
okay, and I decide now I want to sell it, you no longer have that laptop. Therefore, asset disposal is being credited in this account. I'm losing an asset. Okay, purchasing an asset, I'm gaining an asset. Okay, with me, mindsetters?
I'm with you.
Okay, you with me?
Yes.
Okay, brilliant. Right, guys, let's move on with that note. Okay, so we've done depreciation. Now let's look at interest on loan or interest expense. I'm going back to my information. Okay, interest expense is from the income statement. So if we go back to the income statement, our interest on loans is given to us. We don't have to calculate the amount, 12,900. So let's fill that in, 12,900. Right, now remember, this is something that you would have discussed in class. It's part of format. We are going to take our net profit before tax. To that, we're now going to add back depreciation, because remember, it's a non-cash item. We're adding back depreciation, and we're also adding back interest on loan or interest expense. We add back interest expense only because it's disclosed separately on the actual cash flow statement at a later stage. That is why we add back interest on loan. Okay, so let's quickly do that. Okay, so I'm going to take my 150,000 net profit. I'm going to add back my depreciation, 43,200, and I'm also adding back my 12,900, which is my interest, and this now gives me 206,100. So let's fill that in, 206,100. Right, and in terms of your format, remember, this amount represents your operating profit before changes to working capital. Okay, guys, I'm abbreviating. Abram, what do you know about abbreviations?
Only you are allowed.
Only I'm allowed.
Mindsets are not allowed.
Yeah. Yeah, just the accounting teachers and mindset are allowed. You guys are not allowed. Right, operating profit before changes to working capital, calculated already. We're now going to focus on changes to working capital. Now remember, guys, working capital, what does working capital mean? Do I have enough cash to pay off my short-term debt? I'm sure it sounds very familiar. I'm talking about liquidity. Okay, working capital is basically another word for liquidity, where we're looking at our current assets and our current liability. And in this case, we're looking at whether there was an inflow or an outflow of cash in terms of our working capital. Right, so let's start off with the first working capital, which is your inventory or your stock. Okay, for that, I need to go to my balance sheet. So if I go to my balance sheet, okay, there we go. Right, there's my inventory. So my inventory for 2006, my inventory is sitting at 162,000. 2007, my inventory has now decreased to 134,000. So immediately, there's obviously been a decrease in inventory. Let's look at how much inventory decreased by. So if we take our 162,000 minus 134,000, I'm getting a decrease of 28,000. Right, now what does this mean in terms of your cash flow statement, guys? This is very, very important. A decrease in inventory is simply less cash tied up in stock. The business is obviously spending less on cash. Now remember, in that case, that represents an inflow. Money is actually staying in the bank account because we're buying less stock. So that 28,000 on my answer sheet, I will firstly indicate that there was a decrease in inventory, a decrease of 28,000. And that 28,000 represents an inflow of cash. Okay, right, let's move on. The next item we're looking at is your debtors or your trade and other receivable. And under your debtors, we obviously, for this calculation, looking at debtors, we're now going to look at the balance sheet, the note, trade and other receivable. So let's now go to our note. Right, it should be further down, there we go. Right, my note, trade and other receivable. In this calculation, I'm including all the items that fall under trade and other receivable except for SARS income tax. So this amount, SARS income tax, I'm going to leave out from my calculation. Right, so we're going to start off with 2006 first. Let's get the calculator out. 2006, if I had to total the note, I'm starting with 34,000. I am then going to add 500, and I'm also going to add 1,500. Okay, because remember there's no SARS income tax, and I'm getting a total of 36,000. Right, going to do the exact same for 2007. However, I need to leave out SARS income tax from this calculation. So again, let's get the calculator out. Okay, we're starting off with 23,000. We're now going to add 800 plus 1,400, and that gives me a total of 25,200. Right, now we're going to compare 2006 to 2007. Has there been an increase in trade and other receivable, or has there been a decrease in trade and other receivable? Okay, so again, with the calculator, I'm now going to quickly subtract. Okay, that's 2006 minus 25,200, and that gives me an amount of 10,800. So I'm going to write that down, 10,800. Right, now how does this impact on cash flow? If I compare last year in total, debtors, and when I say debtors, guys, please remember I'm obviously including accrued income, prepaid expense. Debtors were owing the business 36,000. This year it has decreased to 25,200. So in other words, can you see they are paying us at a much faster rate? Now, if your debtors are paying you much sooner, the difference represents an inflow of cash. Money's coming into your bank account. Okay, they're owing us less, which means that they're obviously paying us much sooner. So that 10,800 in my answer sheet, there's obviously been a decrease in debtors, 10,800. Okay, I just want to quickly check that amount is correct. Yeah, you're 10,800. Right, then finally, the last item under working capital, we're now going to look at creditors. Okay, again guys, for creditors, I'm now referring to a balance sheet note, trade and other payable. So let's go back to our information. There we go, there's our trade and other payable. Right, so in this particular note, under trade and other payable, remember guys, with your format again, there are certain amounts that you have to leave out from the calculation. So trade creditors is included, SARS income tax must be excluded, accrued expense is included, shareholders for dividends, however, must be excluded because they are used for another calculation or another note in the cash flow statement. Right, so let's add up quickly. Trade creditors, 54,000. Then I've got my accrued expense, which is 800. So in total, if I add up, I'm getting 54,800. Right, if I do the same for 2006, I'm starting with my trade creditors, 63,000. Then if I look at my accrued expense, which is 700, so I'm adding up these two figures, I'm getting a total of 63,700. Okay, again guys, once you have those figures, you're now doing a comparison. So last year, the business was owing their creditors 63,700. This year, 54,800. So let's look at the difference. Okay. 63,700 minus 54,800. And that gives you an amount of 8,900. Now, what does this imply? Let's quickly first write down the 8,900, and we're going to look at what does this mean in terms of inflow or outflow of cash. Okay, immediately we notice, okay, if we compare 2006 to 2007, can you see we are now owing our creditors less? Immediately, it means we are now paying our creditors. When I say we, I'm talking about the business. We are paying our creditors much more sooner. And because we're paying our creditors much more sooner, this is considered an outflow of cash. Money is leaving our bank account. Remember, one more time, guys, 63,700 minus the 54,800, we're getting a difference of 8,900. Again, we're paying our creditors much more sooner, we're owing them less, therefore, our bank balance has decreased. There's been an outflow of cash. So that 8,900 in my answer sheet, 8,900, an outflow of cash must be shown in brackets. Okay, please remember, this is absolutely important. You leave out the brackets, you do not get marks. Okay, going to say that one more time. Abram, these brackets, if I leave them out, I'm not going to get marks. Okay, similarly, if I put in brackets where there shouldn't be a bracket, then I'm going to also lose marks. Because remember, anything in brackets represents a negative number.
Well, whilst you're in that, Refilo actually said on Facebook, I don't understand why we don't put depreciation in brackets on note 1.
Okay, right, let's answer that question. Okay, it's Refilwe.
Yes.
Refilwe, depreciation, remember, is a non-cash item. What do we mean by non-cash? Depreciation, look at Abram's laptop. Okay, in a few months' time, his laptop loses value, it depreciates. But does money physically come out of your bank account, Abram?
No.
No. Okay, so if your laptop has depreciated by 500 Rand, is there someone going inside your bank account and taking away 500 Rand?
No.
That's not happening.
No.
There's no gremlins that's taking away his 500 Rand, thank God. So that is why we call it a non-cash item. In the income statement, I subtracted depreciation because it was an expense. Income statement, I'm trying to work out my profit. In the cash flow statement, however, I'm looking at actual cash. So because depreciation is a non-cash item, it is now added back. Okay, I hope I answered the question.
You have.
Okay, right, cool. Should we take a break or should I move on to the next, or should I quickly finish this note?
Quickly finish that one.
Okay, right guys, the note, we've completed the note, so remember, it's just basically adding now and subtracting. So if I add the numbers that I've now just put into a block, I've got an inflow of 28,000 plus 10,800 minus 8,900, and that gives me a positive 29,900. And remember guys, because it's positive, operating profit before changes to working capital. I can't read my own handwriting, Abram. Okay, so this amount plus the 29,900 is going to give you the final total for this note. Okay, so let's just add that up, plus 206, 100, and that gives us 23,000, no, let's go back, 236,000. And remember, and this is where my students go, whew, this is now the first line of the cash flow statement. Okay, so this amount, right, 20 marks for this calculation, this is now the first line on the actual cash flow statement. Okay.
Nice one.
Nice one.
Thanks, Mahesh. You've
Okay.
simplified it. We've got some great comments all the way from Kenya. Some mindsetters are sending their shout-outs to you, Mahesh. And on
Yeah.
Twitter as well, at Young Chama, a.k.a. Matimba, saying he's enjoying the show. Also, Akola, cheer for enjoying the show. Thank you guys for being part of our show. Some more questions for you, but after the break.
Okay, cool.
See you guys soon. Welcome back, awesome guys. Now for you matriculants, we've got exciting competitions in store. One is where you can win 1 year's free accommodation next year. So if you've thought about registering at any higher institution of learning, make sure that you also think about accommodation, but you can enter for our competition. All the details are on our Facebook page. It's the South Point competition where they want you to win accommodation for free, guys. Well, Mahesh, I've got some questions.
Okay.
Right. Enjoying the show. Please tell Mahesh that she is taking us to the peak. That is
wow.
Tanyani Pelembe. And Susan Wahito say, hello there. Say hi to Mahesh. Enjoying the show from Samburu country in Kenya.
Oh, wow.
And a question from Bongani Mnisibobo says, hi AP and Mahesh, can you please ask if it's important to exclude SARS and shareholders for dividends from debtors and creditors, and why should we exclude it?
Okay, firstly, hi to you guys as well. It's fantastic to know how many of you are actually watching and learning from the show. Remember, we learn together. Okay, so I'm absolutely really overwhelmed with the comments. Right, going back to the question,
Yes.
why do we exclude SARS and dividends from our calculation for changes to working capital? Now, guys, the reason for that is there is a separate note for dividends paid, and there is a separate note for SARS income tax, in other words, taxation paid. That's the reason why we exclude those amounts from trade and other receivable and trade and other payable when doing changes to working capital calculation. Okay.
All right.
Right, and the nice thing is we're now going to look at those calculations. In other words, we're now moving on to our dividends paid. And if there's time, we're also going to look at taxation paid. Now remember, guys, when you get to this part of the question, the examiners now give you an option of the method or the choice of calculation that you want to use. In other words, they're not asking you complete the note for dividends paid. If you go to the actual question, it says calculate dividends paid. Now there's two ways, or there's many ways in which you can do the calculation. Let's start off with the first method that most of you prefer. We're going to start off looking at an actual note. So a lot of you prefer to do note number 3, which is dividends paid. We're going to start off with balance at the beginning of the year. So in other words, how much were we owing our shareholders at the beginning of the financial year? So if we now go to our information, okay, wrong one, there we go. Right, so at the beginning of the year, remember again, 2006 represents the beginning of the financial year. Shareholders for dividends, the business was owing their shareholders 12,000. So let's fill that amount in. At the beginning of the year, the company owing their shareholders 12,000. Because that 12,000 rand will be paid, it is considered to be an outflow of cash. We're not going to make our shareholders wait for an entire year. Whatever we were owing them from last year will now be paid, hence it must be in brackets, it's an outflow of cash. Right, the next line, we're now looking at our financial statement, and here we're looking at our total ordinary share dividends for the year. So in other words, what was our interim dividend plus our final dividend? That gives us our ordinary share dividends for this financial year. So if we go back to our additional information, should be further up. Okay, there we go. The following dividends were declared during the financial year. I'm just going to include declared and paid, because remember, guys, interim is normally paid, final is declared. So your interim dividend, an amount of 30,000, final dividend is an amount of 20,000. Therefore, if I add the two, my total dividends for the year is an amount of 50,000. Okay, so let's take that through to our answer sheet. Dividends for the year, an amount of 50,000. Okay, and again, it is an expense, therefore it must be in brackets. Right, last bit, we're now looking at balance at the end of the year. End of the year represents how much are we still owing our shareholders at the end of this financial year. So again, back to our information. Okay, trade and other payables. End of the financial year is obviously 2007, and we are owing our shareholders an amount of 20,000. So again, back to our answer sheet, let's fill in the 20,000. This part is absolutely important because that 20,000 hasn't been paid as yet. Remember, final dividend is only declared at the end of the year. Declared meaning we make this announcement, but we haven't physically paid our shareholders the 20,000. That 20,000 is still sitting in our bank account, therefore it's considered to be an inflow of cash. It's still in our bank account and it must not be in brackets. Right, I'm now able to work out my dividends paid. Okay, and my dividends paid, let's just bring this down a bit. Dividends paid. Okay, so I've obviously got a negative 12,000 plus a negative 50,000. Okay, so in total, my negative 62,000 minus the 20,000, and I've paid my shareholders an amount of 42,000, sorry. Okay, right, Abram, are there any questions on this calculation? My mindset is fine.
They're fine on the calculation. I'll give you if there's
Okay,
anyone who has a
cool,
question on
that's
that.
absolutely fine. Right, Abram, how long did I take to do this calculation? About 4 or 5 minutes maybe?
Yeah, less than that actually.
Okay, less than that. Time about 3 minutes?
Yes.
Okay, close to maybe 4 minutes.
Yeah.
Right, can I show our mindsetters another way in which we can do this calculation, and it will literally take me less than a minute.
Okay.
Okay, right, guys, remember, it's calculations. I can choose the method that I want to use. Right, now, the calculation that I could also use to work out dividends paid is a simple formula. I could take my opening balance at the beginning of the year and add my interim dividend that was paid during the year. Okay, so if we go to our additional information, which I'm not going to do immediately because I've got the figures here already. At the beginning of the year, I was owing my shareholders 12,000. Okay, so we're filling that in. If I now add my interim dividend, so let's go to your additional information. If I go to my interim dividend for the year, okay, interim dividend is an amount of 30,000, and if I take it through to the calculation, plus 30,000, that gives me 12,000 plus 30,000 is giving me an amount of 42,000, which is exactly the same as what I've done here. Okay, Abram, you look shocked. Okay, so remember, guys, mindsetters. Yeah,
Your 42,000, that one. Why
Yeah.
is it not in brackets?
Okay, this
total.
42,000, remember, it's a calculation. Okay, absolutely correct. Both amounts should be in brackets because it's paid.
Yes.
Okay, but in terms of the calculation, getting to the 42,000, I've used one method where I've drawn up the note, and then I've used a second method where I've simply taken my opening balance plus my interim dividend. Can I quickly explain the logic behind
Yes,
why it's
yes.
also giving me 42,000? Right, now remember in my introduction I mentioned we're focusing on cash, money coming into the business, money leaving the business. So if you look at dividends paid, I'm trying to calculate how much did I physically pay my shareholders in terms of dividends. How much of money came out of my bank account in order for me to pay my shareholders interim dividends? I was owing them 12,000 at the beginning of the year. Now remember, as accounting students, you know during the year you will definitely pay whatever you were owing them 1 year ago. Okay, so hence 12,000 has to be paid. What else do I pay? My interim dividend, what I declare during the financial year, is always paid during the year. So my interim dividend is 30,000. Why do I simply ignore the final dividend? Because I've declared it, but I didn't physically pay it. Okay, so hence, I'm taking my opening balance plus my interim, and voila, it's giving me what I've paid my shareholders, the 42,000. And yes, you are absolutely correct. Both amounts should be in brackets because it is an outflow of cash.
Nice
Okay,
one. Okay.
nice one. Right, let's move on now to the last calculation. We're now looking at taxation paid. And again, guys, various ways in which you can do this calculation. Let's start off with the actual note. So once more, it's based on format, which you should know, balance at the beginning of the year. So let's go to our information, and we're now looking at SARS. How much did we pay SARS, or how much, sorry, did we owe SARS at the beginning of the financial year? Right, so trade and other payable, okay, beginning of the year again is 2006, and if we go to SARS income tax, at the beginning of the year, we owing SARS 8,000 Rand. Okay, so let's fill that in. Beginning of the year, I'm owing the receiver an amount of 8,000. Now again, guys, if you are owing an amount at the beginning of the year, Abram, do you think SARS is going to wait until you make this payment, going to give you 1 year to pay the 8,000? No, they're going to want to be paid. So immediately, this will represent an outflow of cash. In other words, whatever you owed at the beginning of the year will be paid, hence it needs to be in brackets. Right, the next line, we're looking at your amount in the income statement. So what was your income tax expense for the year? Okay, so back to my information. And here I'm going to now go to my income statement. So my income tax for the year, there's that amount of 60,000. So let's take that through. Income tax for the year, 60,000. It is an expense, hence it needs to be in brackets. Right, finally, we're now looking at your balance at the end of the year. So at the end of the year, remember guys, you should know this, SARS income tax can have a credit closing balance or a debit opening balance. In other words, it is possible for SARS, for you to owe the receiver, or rather the business to owe the receiver at the end of the year, or for the receiver to owe you. Okay, now how does that happen? How does the receiver owe you money? It's fantastic when it happens, Abram, but how is that possible? Okay, it's not as though the receiver wants to now pay you. It happens because you overpaid the receiver during the year. As a result of you overpaying the receiver, they now owe you money. In other words, the receiver becomes a debtor, not a creditor. Okay, so if we go to our information, that's exactly what has happened in this exercise. So if we go to trade and other receivable, SARS income tax, there we go. Falling under trade and other receivable, in other words, the receiver is owing the business 2,800 Rand. Okay, so in our answer sheet, how are we going to show this? 2,800. I have overpaid the receiver. Money has left my bank account. Therefore, this amount also needs to be in brackets. Okay. Right. We actually are now at the end of the question. Okay, so we've finished the entire question, guys. All we're doing now is adding up to get our taxation paid. Okay, there we go. So we're taking 8,000 plus the 6,000, and then plus 2,800, bearing in mind they are obviously all negative figures. Just take that one out. So in total, we've paid the receiver 16,800, and this needs to be in brackets. Let's just quickly check. Yeah. Okay. Right. Woof.
Well done, Mash.
Seems like a marathon. But we're done. Right. Are there any questions or?
Yes,
Yeah.
I can give you. There's one that says, why income tax is excluded in debtors? Okay, we've answered that
We've
one.
answered that.
Leonard was not listening. Dungi says, why are we not getting taxation in note 1?
Why are we not getting taxation in note 1?
Yes.
Right. We do not show taxation in note number 1 because it actually has its own category, which is note number 4. I think I'm correct. Either note number 3 is dividends, note number 4 is taxation. So that is why we don't show taxation in note number 1.
Okay.
Okay.
Well, because of time, that's where we have to end it with this
Okay.
beautiful comment from Rirantu. saying, bonjour, Madam Mahesh. I'm enjoying doing accounting, even though I'm not doing accounting, but this show has been so great. I like the way you teach. Make sure, guys, that you always have our notes. And thank you so much, Mahesh.
It's been a pleasure.
Right, guys, thank you for watching. Remember, we've got awesome competitions for you guys. Even the Be a Bright Spark competition, it's still happening. Check more details on our Facebook page. It's Safeway, Safeway's K53, or the Mindset Learn Extra page, where you can enter to win a cool Chevy Spark L. But from us, we just want to say we appreciate you guys and we love you. Peace.